Peace, guys. Welcome back to ZENSFXHUB, where macro markets is simplified. In this video, we're going to talk about the FOMC meeting that we had on Wednesday and all the fundamental data that dropped and how we're going to put it all together to see the direction the U.S. is headed. Okay, so let's go ahead and get right into it. All right, Fed minutes meeting and fresh data. We're going to talk about inflation. We're going to talk about labor growth. We're going to talk about it all. Okay, main objective of this slideshow is we're going to see the Fed current policy stance, the latest inflation data, the new slowdown in economic growth, and what PMI is signaling. Okay, so policy decision, where the Fed is right now. Okay, so what they did right at that meeting was they said that they was going to hold rate steady. Right, they're not in a rush to decrease the rate cuts. Right. Majority of the members decided to hold rate steady, while two members was like, no, we should do a rate cut at 0.25%. Okay, so the tone of the whole entire meeting was kind of neutral, right? They pretty much are dependent upon the data that drops, right? Because they want to make sure before they start to do rate cuts that inflation is stable. They want to make sure that the labor market is not rising and elevating too quickly. They just want to make sure before they decide to do this that it makes sense for the overall economy. Okay, so until they get enough information to see how they can move forward, they're like, you know what, we're gonna pause. Now, I'm not saying that rate cuts aren't on the table, but as of right now, they're saying that we're not looking to do rate cuts right now in these moments. Okay, so inflation. Now, I broke this down into two parts. Pretty much the information from the meeting and also the PCE data that dropped. Okay, so inflation remains elevated, right? Tariffs are putting pressure on core goods and services. Inflation is cooling, especially in the housing sector. And if you're wondering why I mentioned core goods and services inflation, again, I'm always going to revert back to videos that I put out already, because if you're staying, watching every video, you can, again, connect the dots. So this was the first video I dropped for 2026, and I explained the most important factors when it comes to inflation and what the Fed and what foreign investors and what is the main, what is really important. And as you can see, core PCE and services inflation is very important. So this is why, I put it in this presentation. Okay. So now when it comes to core PCE, the new print that dropped on Friday, it came out at 0.4%, which is higher than what was forecasted, but it's also higher than the previous reading. Okay, inflation at one point was slowing down, but now it stopped slowing, and you can see it creeping back up. Okay, so this is a reason why rate cuts has been pushed back further, because if inflation is going to continue to rise, then the Fed feel like there's no point in doing rate cuts. So rate cuts is determined on how much inflation is going up or down. All right, so this is why they're on some shit we're gonna wait and just see. Okay, so when it comes to the labor market, right, unemployment rate is at 4.4%, which is not bad, but it's also not good, right? It's just really in between. Okay, companies are being careful about adding new workers. Layoffs are still low, and the Fed thinks that the risk of the job market getting worse has decreased. So the labor market is cooling, but it's not collapsing. Okay, now if companies aren't in a rush to hire new workers, then what do you think that's going to do to the unemployment rate? It could go up, right? So this is why I said right now the unemployment rate is in between, right? Because it can go from 4.4%, and then next reading we could be at 5%, and then after that we could be at 6%, or we can be at 4.4, dropping down to 4%. So it's just kind of like a wait and see thing, and this is why the Fed is maneuvering the way they are. Peace, guys. So look, I created a free Telegram where I break down every single trade that I take. I give you the fundamental reasons, and I also give you the technical reasons. Whenever I make a new YouTube video, I post it in here so you can be up to date with it. And also, when I get in for a trade, I tell you the entry, the stop loss, and whether I put a TP, which most of the times I don't. And I let you know how much I'm risking on that trade. All right. So if you want to be a part of this community, you want to grow with me, and you want to make some money, join the free Telegram. Now, I will say that I am a position/swing trader, so I do not call out trades every single day, but the trades that I do call out, we get in and we hold and we ride the wave. All right. So join the free Telegram. The link is in description. I will see you guys in there. Peace. All right. right. So now the economic growth when it comes to GDP. The print that we got for GDP this week was 1.4%. It was forecast to come out 2.8, but the previous reading was 4.4%. That is a hard decline, right? And it's telling us that demand may be softening and downside growth risk is rising. Okay, the economy went from like solid growth to growth cooling fast. Okay, so far when it comes to inflation, when it comes to the labor market, when it comes to GDP, it's just a lot of mixed emotions going on right now, and we're gonna talk about that more. So flash PMI was another piece of data we got, in the previous week. Flash manufacturing PMI came out negative and below expectations. Flash services PMI came out negative and below expectations. Now, if you go on forexfactory.com and you see that this piece of data, yes, they are above the 50% point, because I know I said this to you guys before if you have been on my channel, but if you haven't, when PMI is PMI reading at 50 is considered to be good. Anything below 50 is considered to be bad, okay? But it's the fact that it came out lower than expected and they both came out negative. So they have dropped since last month, and this could be a signal that business activity is slowing. All right? And this is and I know I say this a lot in my videos, but when you put the pieces together, guys, like it just all makes sense. You see how when it came to the labor market, companies weren't in a rush to hire people. If you have the business activity slowing, then that means there's not room for new people to come to work for those businesses. Do you see how it comes together? Come on, stop fucking playing with me. All right. So the conflict. Remember what I was saying? It's just a lot going on. It's like a lot of mixed signals. This is the conflict, right? We have inflation reaccelerating. So, core PCE coming out high. So you got inflation coming up. Then you got growth slowing sharply because GDP dropped from 4.4% to 1.4. You got business activity weakening based off the PMI data. And then the labor market is, like I said, is somewhat stable for now. So this is a mixed environment. You have sticky inflation plus slow activity, which equals policy tension, and hence why the Fed is on some not in a rush to do rate cuts. Okay. So forward guidance, okay, what determines the next move? So we have to continue to look at inflation, we have to continue to look at the labor market, and we have to continue to look at the real economic momentum, okay? The Fed is weighing which problem is more dangerous right now, whether it's inflation staying too high or the economy/jobs weakening too much. So they're trying to figure out which one that do they need to tackle before they could feel like they can move forward. So most members believe that downside labor risk has eased. So they're like, you know what? Maybe the labor market and the economy is not too bad. And but on the other hand, they believe that the inflation may remain high for a little while. So they may try to tackle the inflation, problem before they tackle the labor problem. Okay. So again, we just have to wait and see and stay up to date with everything that's going on. All right. So now in this video, I also broke it down in the same video. Not gonna jump around, but in the same video, I literally broke down uh the scenarios, right? The four different scenarios that could play out this year, right? So if you want to get more detail in that, watch that video, because then what I'm about to say now would make even more sense, okay? So but for now, I just literally put it simple, right? Scenario A, we get a soft landing, which is inflation is falling, labor market cools gradually. Scenario B, recession equals, which is inflation falls, but the labor market is breaking, like it's out of hand. Okay. Scenario 3, the Fed is trapped, so they can't make a decision. You got sticky inflation, but the labor market is also stable. And in scenario D, we have stagflation, which is inflation is sticky, but the labor market is weakening. And again, I talk about that more in that video that I showed you, and I'm gonna show you guys again so that you guys can go fucking watch it. Okay, the 2026 economic outlook. Go watch that. All right. So let's go ahead. So what I want you to take away, right? How can you take this information that I just talked about and put it into the markets and put it into your trading? Okay. So the current bias that we in right now is like a scenario C that's shifting towards a D. Okay. Why? Because the labor is stable, so that's more of a C scenario. GDP plus PMI weakening, that's more of a D scenario. But then you have high inflation, which is both C and D. Okay, so when it comes to the U.S., right, the U.S. Supported based off the current environment, but the upside is going to be limited. So right now, being that the Fed is like, we're gonna pause doing rate cuts and we're gonna see how inflation it turns out, what's going on with the labor market, how's the growth of the economy, that is kind of supporting the US dollar, but it's that movement to the upside is going to be very short lived, right? And not to even not and this has this I haven't even mentioned not one time the global uncertainty that's still going on in the economy and in the world right now. So that's not even including that. This is just strictly based off the information that came out this week. Okay. So yields, right? Yields may be elevated, but it's going to struggle to, to stay up, right? If yields are going up, then that's good for the US dollar because that means foreign investors, central banks are buying up, US bonds, right? But that's not the case, right? And then gold, right? Supported by the gold will continue to go up, in my opinion, because it's still supported by the global uncertainty, but also the weak growth inputs that we got this week. Okay. So again, if you find any value in this video, please like and subscribe, share with a friend, and come back for more. And make sure that you guys tap in with the free Telegram because I literally break down all my trades, the technical, the fundamental reasons why. I give you the entries, the stop loss. I don't put a TP on every single trade I share with you guys in depth. Okay, so make sure you join the Telegram. I see you guys in the next video. Peace.